Types of common stocks in the stock exchange. Registered common stock bearer. Common stock characteristics of registered common stock. Name of owner. The name and surname of the owner appear on the stock certificate. Ownership. Ownership is proven by presenting the certificate and recording it in the company records. Transfer. Registered shares are transferred by endorsement and delivery. Security, more secure than bearer shares. Advantages of registered common stock. Easy proof of ownership. In case of loss or theft, ownership can be proven more easily. Closer relationship with the company. The company can communicate with its shareholders more easily. Privileges in some cases. The company may grant certain privileges to its registered shareholders. Disadvantages of registered common stock. Transfer process. The transfer process is more complicated than bearer shares. Liquidity. It has lower liquidity than bearer shares. Conclusion. Registered common shares are a safe option, especially for long-term investors. However, disadvantages such as the complexity of the transfer process and low liquidity should also be taken into account. Bearer common shares. Bearer common shares are a type of stock in which the identity of the owner is not recorded in the stock certificate, and only the transfer of ownership is sufficient for the change of hands. Such shares are frequently used in joint stock companies and can be easily bought and sold between investors. Features of bearer common shares. Anonymity. The identity of the owner is not written on the certificate, which provides anonymity to the investor. Ease of transfer. It can only change hands with the transfer of ownership, which makes buying and selling transactions easier. Shareholders' rights. It grants the owner shareholder rights such as dividends, and voting rights of the company. Types of bearer. Ordinary shares. Bearer shares usually differ according to their nominal value. The nominal value is the value written on the certificate and represents the share in the company's capital. Buying and selling bearer. Ordinary shares. Bearer shares can be bought and sold on the stock exchange or over-the-counter markets. While stock exchange transactions are made through brokerage firms, over-the-counter transactions are usually made through direct communication between the buyer and seller. Advantages of bearer ordinary shares. Liquidity. They can be bought and sold easily, which provides liquidity to the investor. Anonymity. The identity of the owner is not written on the certificate, which provides anonymity to the investor. Ease of use. Transfer transactions are easy, which speeds up the buying and selling transactions. Disadvantages of bearer ordinary shares. Risk. They carry the risk of losing value, which is a risk factor for the investor. Forgery. There is a risk of forged certificates being produced, which is a security issue for the investor. Loss. There is a risk of loss or theft, which is a loss for the investor. Conclusion. Bearer shares are an investment vehicle that offers investors anonymity and liquidity, but they also carry risks and security issues. It is important for investors to do careful research and assess the risks before investing in such shares. Warning: investing in the stock market is risky. Be sure to do your own research and consult with a financial advisor before investing. This information is not intended as investment advice. The author and publisher are not responsible for any losses incurred,